Welcome back to the First Time Homebuyers Club. So today we're going to talk about FHA. So you're going to hear FHA floating around from your lenders to your realtors, escrow officers. You're just going to hear FHA and you're wondering to yourself, what is an FHA loan? Okay, so the Federal Housing Administration, which is FHA, a part of the U.S. Department of Housing and Urban Development. So that's HUD, and they insure the FHA loans in a nutshell. So you have banks, credit unions, and other private lenders. They provide the FHA loans. So you may be a member of Chase Bank or any of your credit unions. They all provide, for the most part, FHA loans. If they don't, there's other resources that can help you with that. So FHA guarantees it will repay the loan if the borrower stops making payments. So this guarantees means financial institutions are willing to provide mortgages to buyers who may not qualify for a conventional loan because they have a low credit score or they just may have a lot of debt. Now, a conventional loan sometimes will have higher down payments. So you may not want to have a high down payment. So the benefits of having an FHA loan, you can have a low credit score, low down payment, which is 3.5% of the actual home amount. So if the home costs $200,000, that's going to be $7,000 down payment. And also another amazing benefit is that you can buy 1 to 4 units of a property. So you may have 1 unit, which is a single house. A duplex is 2 units, a triplex is 3 units, and then you can get a fourplex, so you can get 4 units. So that is an amazing benefit of having an FHA loan. So that's amazing. So you can start off, and let me tell you why this is super important. Because sometimes people, they know they want to buy a property, but they may feel a little bit doubtful that they may not be able to keep their mortgage payments up. So let's say you have a triplex and your mortgage payment is $3,000 a month. Now, having a $3,000 a month mortgage payment, it may sound a little scary, but if you have 2 other individuals contributing to the mortgage payment. So let's start with the first unit. So the first unit, maybe they pay about $1,500 a month. The second unit, maybe they're paying about $1,700 a month. So that's a total of $3,200. So $3,200 and your mortgage payment is only $3,000. So you have a $200 surplus. Now, on your end, you can save up your monthly payments to hopefully secure another property in the future, or you can just boost your savings, go on vacation, just feel more secure. Your mortgage payment is paid, and that you just feel a lot better because you have that security. So I feel like that's really important when you're a first-time home buyer and you just want that little bit of security. I would say get multiple units. I think that is really nice to have, and it's a great benefit as being a first-time home buyer. I mean, that's amazing. Okay, so let's start getting ready to get that FHA loan. What will you need? So the first thing you need to do is start gathering up your documentation. So your pay stubs, your W-2s, tax returns, your bank and loan statements, and proof of any other source of income. Number 2, find an FHA approved lender. So you want to use, let's say, your credit unions that we mentioned before. You may be a member of like a Chase Bank, Wells Fargo, or B of A. They have FHA loans as well. So next, you want to choose a loan officer. Once you've selected an offer, so that's after you find your house, you put an offer on the house, and then you're going to contact the lender to let them know that you want to move forward. Then the lender is going to ask you for more supporting documentation, your cash reserves, and they probably ask you more questions. So while you're in that process, you're going to probably get a home inspection just to make sure the house is, good. Maybe you want something that's a fixer, But you still want to get a home inspection just so you know what you need to do within the home or what you don't have to do. So then the next step, you're going to get an appraiser. So the appraiser is from the lender. The lender will schedule an appraisal to ensure the property meets the FHA requirements and confirm the home's value. So if the appraiser determines that the home is worth less than you've agreed to pay, you will need to negotiate a lower price with the seller. So then you're going to pay the difference out of pocket or find a different loan. So then the next step will be to close on your home, which is the most exciting step. So you're going to review the rate and other loan terms, including the final closing disclosure, and attend the final walkthrough. You're going to sign a slew of paperwork and pay your closing costs, and you'll receive your keys to your new home. So you want your lender to break down every cost. You want it calculated into a dollar amount so you know exactly what you're dealing with. So when you get to that closing day, which is so exciting, you have all this paperwork to sign and you want to make sure what you have to bring in for closing is almost exact. So that is the best advice I can give you. Make sure you know the numbers. Don't get so caught up in the home where you forget about the loan. You do not want surprises. You want to make sure you are keeping close contact with your lender and that you know exactly what you need to do so that when you get to that closing day, you feel good. You don't feel like you're missing anything or where did that cost come from. You want to go over everything with your lender so when that closing day comes, you're totally prepared. All right, so if you don't know what a single family home is, a duplex, triplex, or a fourplex, take a look at these homes. Look at what your FHA loan can get you. Take a look at this. Which one do you like? Well, I want to thank you all so much for learning what an FHA loan is. I will see you on the next video. So don't forget to like, share, and subscribe, and hit that bell.